Welcome to the Same Day Podcast, where we discuss driving incremental business growth and other topics related to real estate, property management, and entrepreneurship. Now to the show at hand.
Walter Bowser here. I'm the host of this episode of the Same Day Podcast, where I connect with top business real estate leaders. Today's episode is brought to you by Keyrenter Property Management. At Keyrenter Property Management, we're a full-service property management company helping our clients buy, renovate, and operate real estate assets. We help our clients build wealth while taking the headache of property management off of their plate. Alyssa, we've helped over 1,000 investors manage their properties from non-performing portfolios, renovations, or finding new investments. We can help. That's why no matter what rental you have, single-family homes, condos, townhomes, apartments, we have the management for it. I'm super excited to have you on, Alyssa. Tell me a little bit about yourself, what you're doing, and about your company.
Yeah, thank you so much. I'm happy to be here. So I own Table Investments. We've been around since 2017. Sounds like we kind of work in the same area. We do a little more brokering. So we do a lot of helping people find the asset, underwrite it, kind of go through that whole acquisition process. We do some management, definitely not at the scale that you guys do. Most of our management focus is actually on short-term rentals. So maybe other people would recognize that as like Airbnb or executive rentals, corporate rentals, anything that kind of falls under that wheelhouse.
That's awesome. So you said something interesting to me, doing the acquisition, process of it. Kind of dive into that a little bit deeper. What does that look like?
Yeah. Man, the whole podcast could go just to acquisition piece. So for in general, or are you asking for short-term rentals specifically?
For short-term rentals specifically, I mean, I think it's super interesting. I think it's very different than long-term rentals, especially kind of like where you're looking, how you do the underwriting and kind of like, I guess, expense lists and kind of key factors that way.
Yeah. So generally as a starting point, location is kind of the holy grail that we look at first. Learned that pretty early on. When a guest checks into your property, or checks out, really all platforms are the same, and almost every single one of them is going to have the guest rank you in different categories, communication or cleanliness or location or etc. It's challenging when you're doing everything right, and no matter what, you're getting dinged on a 3 or a 4-star on location. So it's just the uphill battle can be pretty challenging. We generally speaking stick to central Oklahoma City. So for people who are kind of familiar, anywhere that is historic over by OU Med does really well. Anywhere central to like the fairgrounds, hospitals. We actually have a ton of training at Will Rogers Airport and the surrounding area for the FAA. So anywhere that's close to I-44, Hefner Parkway. I have a map that I generally send out to people. If it would be helpful, I can give it to you to link in the show notes. But generally, you just want to be somewhere. You don't have to be right in the thick of downtown, midtown, but you do need to be accessible to places. It needs to not feel sketchy. I'll get investors that are like, yeah, I've got a long-term rental. Can I just like turn that into a short-term and it's on a terrible street? Definitely don't want to do that. A lot of the numbers. So location's kind of the first thing. Then we really dig into numbers. I generally start outside of just kind of like knowing what a 1 or 2 or 3 bedroom is going to go for. AirDNA is actually a really good source, with the caveat that you have to know the numbers that you're looking at. So a lot of investors are like, oh, this is pulling, $150 a night, not realizing that in that number, cleaning fees, pet fees, all the individual line items are rolled into that number. So if you've got an average, easy example, if you've got an average cleaning fee of $100 and they stay for 3 nights on average, that $150 nightly rate is actually a lot closer to $120. So when you're doing your projection, that can skew it quite a bit in a hurry. So we'll generally start there for just kind of getting a broad scope of what the numbers are doing. I tend to estimate down, especially with some of the volatility that's going on in the market. And then from there, again, maybe similar to the map, I have a projection that I could send you that's really easy, but just taking into account all the things like consumables, or there's a couple different taxes that have to be paid. Airbnb, if you list with them exclusively, handles paying those for you. But a lot of investors forget to underwrite because they are like, oh, I just got this money. They forget to think about the taxes that are leaving before.
Sure, I'm sure that's super easy to forget about, especially if you don't know if it's your first time.
Yeah, and it's like 9%, so it's a big swing. Yeah. And then if you're in Norman, you have a transient and hotel tax as well. So if you've got both of those together, like all your profit can go towards taxes if you forget. So, there's a ton of nuance with the numbers, but the main things that I see people kind of get a little off course are either forgetting things like taxes or platform fees, because whether you're Airbnb, VRBO, Booking.com, Google Book, any of those, they all have their platform fee. So taxes, platform fees, not really understanding the numbers on whatever source. So whether it's Breezeway or AirDNA or whatever that source of truth you're using to calibrate what that nightly income is going to be, make sure you know how that platform is giving you the numbers so that you're underwriting your income projections correctly, and then just get a location that is actually going to be desirable.
Yeah, absolutely. So let's look a little bit closer to because that's super, interesting to me, because as I'm familiar with Oklahoma City, and someone that's not, or kind of just looking around. I mean, you can easily go on Google Earth and go down the street or whatever. But there's sometimes, especially right now in Oklahoma City, I feel like there's a lot of like very, very slow gentrification happening, to where like one house is very nice, right? And then literally the next door, it's like, I don't want to, ever stay there my entire life. How do you like manage that as Oklahoma City is kind of slowly gentrifying downtown Oklahoma City, to where it's not almost, everyone is on the same street, in the same, I'd say.
Yeah, Heritage Hills is really different from 3 blocks north and Jefferson. Yeah. Like they're really different. Man, I don't have like a quippy little short answer on this. A lot of it has come from experience. The one thing I will say that has helped overcome a lot of issues is just being really honest in our listing descriptions. So sure. I'm not saying to border tacky, but if you're on a main street, just disclose that, because I'm a heavy sleeper and I travel with the sound machine. I'm fine if I stay at an Airbnb, on a main road. My partner is not that way. He is really like sleepy. He needs to be somewhere that is quiet. And so I see a lot of managers and owners really selling in their listing, which there's an element of that is required. And you can avoid a lot of bad reviews and a lot of headache by just being transparent about what it is that you are or not offering. Safety, I think, is the main thing that I would say. If it's even a question in your mind that a guest is not going to feel safe, and imagine a woman who is scared of traveling without her husband and traveling with her daughter, and they are staying at the house. If they would feel unsafe pulling up to the house because the next door is boarded up, or it's got trash all over the yard, or whatever, I would probably steer clear at this point and just not do it unless you knew that you could buy that house and remodel that one too and kind of take care of the headache.
Yeah, absolutely. That's a really, really good point to, kind of put yourself in that guest's shoes to make sure that you're feeling safe, they're feeling safe, and, everyone's, good in the area
but beyond that, it's also, you kind of have to put yourself in, like really, okay, investing just kind of like sucks a lot of the time,
Sure.
like
yeah.
I've been in real estate since 2014 as my full-time gig. And so I have been chased out of houses with needles by squatters. I have seen men defecate on the front porch to get me to leave. I've had to call the cops. I've had I'm so exposed that I see a house that's boarded up and I'm like, I just am not really fazed by it at this point. And so I think it's hard sometimes for investors to remember that like most of the general public is not exposed to, like, that's scary. It's really scary. So we kind of have to lower our tolerance, or I guess raise our tolerance for, no, it would be lower. Yeah. for that kind of thing when we're thinking
Just
about
for crazy stuff that happens on a daily basis.
Yeah, and that it is going to impact guests in a way that doesn't impact us.
Yeah.
I imagine you are not phased anymore, and so there's
Exactly. Yeah. You walk
I
into
would just
your fair share of crazy on a daily basis, right?
yeah, for sure. It's just real estate's nuts. So you just have to remember that with short-term rentals, we're moving into hospitality territory more than real estate territory, and so just kind of think about people's experience in that.
That's a really good like piece that you just said. You're in a hospitality area, not just a real estate area. That's a really good truth that I really didn't think of. That's a really good point. Kind of talk a little bit more to that, just, I mean, kind of getting off topic of the acquisition process, but I mean, if you're jumping in and you're doing this and you're owning the short-term rental, what is that mind shift? I mean, obviously you've had that, but where did that come from? And like, how did you come to this point where you're like, hey, I'm having to like shift my mindset from real estate to hospitality?
So I love hospitality. If money didn't matter, I worked through college. I worked at Cheever's, which is, if you're not in Oklahoma City, it's a local restaurant. I suggest it to all the guests. And I loved it. I loved having regulars. I loved that when I saw them walk in the door, I could just start making their drinks so that by the time they sat down at the bar, it was ready for them. I knew which regulars wanted to hear about the special when it was fish and which ones didn't. And then beyond that, the relationship that developed there, some of my closest friends now came as a result of working there. So if money was not an option, I would have worked as a bartender, probably at Cheever's for the rest of my life. I loved it. Getting into real estate was not a passionate decision for me. It was a career decision. So I think that's where short-term rentals have kind of been a fit for me. It feels almost like a merging back to something that I'm actually really interested in. A lot of investors that I work with, they do not care about hospitality. They care that I care about it, and that's okay. That's why they hire us. And the main example, I guess, that I give people is, if you hire me to take care of your long-term rental, there's a contract. And I look at the tenant and say, rent is due on the 5th, and here's how repairs are going to go. And everything, for the most part, is guided by that contract. There's not really a contract with hospitality. If somebody is celebrating something and they forgot candles, you just kind of help them figure out how to get that so that their birthday plans they've been planning for 2 months aren't wrecked. You kind of have to be prepared for if a guest, I mean, there are times where a guest forgets something or they didn't read the amenities in a house and they've got this whole freaking dinner planned and didn't see that a crock pot isn't included. I'm 99% of the time just going to get a crock pot and get it to the house so that they can have a great stay rather than be like, well, the contracts, the amenities didn't list a crock pot. That's on you. Like the review, you just kind of have to think about that piece of it. Like, is the bad review, is the bad experience, more importantly for the guest, really worth like who is right on the amenities? That can be a real challenge for some investors who have lived by a black and white contract for so long. And if that's a real challenge, I would say don't do short-term rentals. There are times where there are decisions that have to be made in the investor's best interest that I don't really have a way to put on a spreadsheet why it's the best decision to take care of the guest.
No, that makes 100% sense. I mean, I don't know how much a crock pot is necessarily. I don't think like, it's probably $30 or whatever is probably worth, the 4 or the 5-star review instead of the 2-star review because they're, in the heat of the moment, like, oh man, they didn't have this crock pot. They're just going to say, whenever it was, they had a horrible stay. That's a really good point. I guess jumping from that, since, we're talking about amenity lists and kind of what that looks like, I'm sure you have one, I mean, obviously, but like a very thorough, list of like, hey, this is what we're going to need for the property. And then kind of jumping into that. So what does that, kind of look like? I guess I called it an expense list, but it's probably more of like a furniture list or amenity list. What does that look like?
Yeah, it's honestly always evolving. The market seems like it's evolving and guest expectations it's kind of a constant door. But yeah, we do have one. I just have a huge spreadsheet that runs down the list and I try to have it kind of broken out because I have some people that are like, hey, can you send me that list so I can get mine set up? I try to have it broken out where it's like, hey, these are the things you have to have. But then beyond that, one of the things that I kind of prep investors for is that each house is different. So if you think about like the Hilton or the Four Seasons or whatever your flavor of hotel is, they're able to control a lot. A lot of times they're developing a building, they have huge relationships, and they're able to kind of in some way set each hotel up to be a carbon copy of each other. Short-term rentals, you can get pretty close, but there's always going to be nuance with each house. And so one thing that investors should know is that this is not, with a long-term rental, you get your make ready done and you put the tenant in, and mostly you're done until that tenant moves out or something breaks. Short-term rentals, it is a constant kind of negotiation with the market for what needs to be done. So baseline, like most elementary, like stock the kitchen. You don't need every little hand appliance in the world, but I mean, there needs to be like enough plates and some, enough mugs and some. I am constantly surprised by how many properties I go into that don't even have enough plates for all the guests.
Wow.
Or they'll have like 4 utensils or
Yeah,
2 pots. I mean, you got to like really stock the kitchen, really having essentials in the bathrooms, and then a quality. I think we tested like 40 different bed linens, and it was extensive, but quality bed linens and a quality mattress actually do matter a ton. So if there was one area I was going to skimp, that would not be it.
So let me ask about that right away. So
Yeah.
you said you tested quite a few. I mean, what did that look like? Was it just like, hey, we're just going to try them out and see what the reviews are on them, or did you specifically?
Yeah. So sort of, and also we're a pretty small team, and this is gonna like definitely be shown in that I bought linens and then like gave them to some of my team members and was like, all right, we're doing like an internal, like bring this home, sleep on it, or like gave them to my friends and was like, I need you to sleep with these mattress or these sheets for a couple weeks and tell me like pros and cons of each. Obviously like flannel, polyester, anything like that is a no-go. It's so hot and it
Sure.
stains. I've found the best. I've stayed away from linens or linen. The luxury feel of it is really nice and they're cool, but they stain so easily. It's nearly impossible to get the stains out of them. So we stick to a 100% organic cotton whenever we can.
Interesting. That's
Yeah.
really cool. No, I mean, like that's probably the best way actually to test them is to have your friends and trusted people, use them. That's smarter than doing it on the guest side because they would
Yeah.
like if I slept in a bed, I'd just be like, I don't know, it's good or not. I don't know, I have no idea. Plus, probably a bunch of different factors, go into that. So that's a really cool way to test it. So from let's just say you're managing a short-term rental for this investor from the minute that you underwrote it, you went through the acquisition process, everything was good, you closed on the property. What happens next?
Okay, in a perfect world, we close, utilities are on. So this is similar to like long-term rental, maybe. Your property closes, you get keys, you get utilities on, you make sure your paperwork's good. That takes 1 to 3 days, depending on what external factors you're working with. In theory, hopefully by the time we've gotten to closing, we've already nailed down the budget. I already have approval on everything. So days, the first like 3 days, we're just getting utilities set up. I'm making the request. If our team is who is doing the installation and furnishing, we're submitting for that contribution request so that we can get all the supplies ordered, and we're spending hopefully about 2, maybe 3 weeks getting the property set up. And then, the 4th week, we're doing deep clean, final trash removal, professional photos, etc. That said, there is always a delay with something with shipping. I have had maybe 2 projects so far where we didn't have something major, like a mattress or a bed or something that we like can't work around, delayed. The other caveat is the city approval used to take way less time than it takes now. So this last round that I went through, it took us about 90 days to get our license back.
Wow.
Yeah. So now we're not really putting the pressure on ourselves to get the setup done so urgently because there were a few that we got it done and the house sat vacant for a couple weeks. We were like, okay, cool. So glad we like really scrambled to get this done.
Yeah, absolutely. So that's a pretty quick turnaround. I mean, minus the licensing or whatever needs to be done with the municipality, but that's really quick. So let's
Yeah,
say,
and I do have to clarify there, that assumes that budget is approved. We've already agreed on the styling selections, all of design and procurement is done. So there's, that assumes that we're good to go, but it can be done that quickly if,
if everything,
everything's
so running
communicated
it
well.
well, that's still, I mean, even if you add 2 weeks to that, that's still way quicker than I was expecting. Um, you know, from let's say the minute you went through that whole process, you got your licensing, you've listed it. When's the expectation for like, hey, we should have a guest within 5 weeks of it going live, or
No, no, definitely. Usually about 2 weeks,
about 2 weeks?
if at most. Yeah, usually Airbnb does specifically, really all the platforms. Airbnb just seems to be the one that most people are familiar with, so I reference it the most. Um, they do a really good job of promoting new properties.
Oh,
Uh,
really?
yeah, and so most platforms, when you list on it, if you're a new listing, they're going to encourage you to do some type of new listing promotion. You're going to be on certain emails and be kind of at the top of the algorithm, to make sure, because they want you to be happy. I mean, if you're
Of
an
course.
owner and it's taking you 6 weeks to get a booking, you're not going to be happy with them. So they actually do a really good job of making sure that you're getting traction out of the gate.
Now that's a super interesting thing that I didn't think of. How much money are you putting towards the marketing side of the Airbnb? Is that a budget that most owners
Um,
combined, or is it?
So us in particular, my brain's gone like 100 different directions with this. Yeah, so marketing. I strongly encourage, I learned a long time ago, quality over quantity in this business. So I strongly encourage all of our owners to, even if they do the setup themselves, at least spend a little bit of money paying for styling and staging consulting. And then we use Sarah Strunk for all of our photos, and she has a lifestyle photography option. It is pricier for sure. But if you can get your styling and design work done right and have really great photos and then pay for additional photos when you do that shoot, that'll do a lot of the heavy lifting for you on the back end. A lot of um, everything is an algorithm now, right? And so one way that I kind of tell people to think about it is, if you look at Airbnb the same way you'd look at TikTok or Instagram or YouTube or whatever your flavor is, they want to see constant activity and constant checking in. So a lot of the work for marketing on these platforms is just paying attention to, okay, if this platform rolls out an update, you need to make sure that your listing is as fast as possible updated to those changes. So that's free to do. You just have to do it. And then beyond that, if the platform doesn't have updates going out, if you've got a bank of very well styled photos that you can kind of swap out from time to time, the system is looking at that and saying, oh, this owner is active, they're engaging, they're making changes to their listing, they're in theory improving. And because of that, we will favor them in this algorithm.
No, so maybe it's not necessarily a whole bunch of dollars. It's just more being active and
Yeah.
proactive, it sounds like. And
Mhm.
really cool on the front end that you can have those, higher quality photos taken and stuff like that, and really do some heavy lifting. That sounds like a no-brainer to me. I would
Yeah.
the
I
hard
just,
sell to most owners, or is it?
yeah, no, not necessarily. It can just be hard when they've spent like 15, 25, 40 grand setting up a house. And I'm like, oh, okay, yeah, can you spend photos on, or like, can you spend an extra like $300 on photos that I'm not going to use right now,
Sure.
but
Yeah.
I need them in the future? That can kind of be challenging. And then a lot of people really do not want to invest in a designer or a stylist. That the photos are an easy sell for people, but they're like, I don't want to spend money on the stylist. But the owners that we have who are spending money on that are making more money. It's something that matters.
Yeah,
The
proof is
photos
in the pudding, right? If it works, it works. Tell me,
yeah.
how much does a stylist usually cost? I guess it probably depends on how big the house is.
Yeah, I mean, it depends on how big the house is, but for the most part, they can come in. And so usually it looks like either totally empty house and we're actually hiring a designer to get it set up. And even that is like less than $4,000 usually for them to pick out everything in the home.
Wow.
And artwork, furniture, because they've got a good rhythm. Like they know what works and doesn't.
Sure.
And then for the homes that are already set up, you're only paying for a couple hours of their time for them to come in and just be like, oh, move this here, move that here. So usually like less than $500, which in the grand scheme of things, I'm like, it's nothing. And it will make you so much more money to have this person whose eye.
They're trained for it.
Yeah.
Yeah. I mean, that's a no-brainer. I mean, that's like, I feel like that's, if I were to do it, I'm obviously, I know nothing about style, but I would definitely hire that just because I would need help with it. Yeah, that seems like a no-brainer to me. I guess, switching gears a little bit, you get your first guest, you're in there. Kind of how long does it, I guess, really take to get everything flowing? And I mean, because I mean, I'm sure you have, vacancy or whatnot. Like what exactly, like when do you see the property hit its best stride? Because in long-term rentals, you're hitting the best stride once the tenant's in there for about 3 months, and then those 3 to 9 month period, there's usually no maintenance requests. You're running pretty good, and you're pretty hands off, right? So how does that look in short-term rentals?
Overarchingly, I'll say 4 to 6 months. When you hit the market, you're going to have a little bit of traction just because you're new and it's shiny and exciting. You just have to remember that you are competing with properties that, I mean, some of these have been on the market since like 2017, 2019, and they have hundreds of reviews. And so you're showing up with your like little 3 reviews. You have to either be undoubtedly exceptional in your photos and marketing and presentation, or you are going to have to list a little bit lower to get the attention, because you're essentially saying, hey, guests, take a risk on me. I know I only have 3 reviews and they have 200, but I'm worth your money. Most guests are not going to agree with you and they're going to go spend their money elsewhere. So you have to make your price lower. Usually about 6 months is whenever I start seeing us really be able to crank up the prices.
That's awesome. So I guess walk me through this, because I'm not like a big review guy. I probably should be. I should probably like look at reviews a little bit more and stuff like that whenever I go to travel. But I'm sure a lot of people out there look at the reviews and really thoroughly. I guess tell me, is every guest required to write a review? And like, what does that look like review wise? Do you know?
They're not required to, but almost every guest does.
Okay.
Yeah. And most guests I've found are actually pretty reasonable. If they're well taken care of and you've set expectations well and are proactive in communication, most guests are actually really reasonable with it.
Well, that makes me seems good, because I always, you hear at least in long-term rentals, you usually get the extremes, right? It's like, like this person's super upset or this person's really great, but most of the people are in the middle, they're just having, living in their house doing it. And I would assume that, is it the same way? I mean, you said they're reasonable, but I feel like if someone had a really bad experience, that's the first thing they're going to be doing is getting on that review and writing it up.
I've had one actually bad review, and or out of, I don't know how many I've got, maybe pushing 1,000, but I've had one actual bad review that I was like, I really don't think that was justified. Most guests are very like, hey, just wanted to let you know I ran into this thing. I mean, easy one from this week. A guest was like, hey, just wanted to let you know I showed up and it looks like Oklahoma wind. The wind had blown the trash can over. So the housekeeper had gone by, pulled it to the curb. Guest checks in late at night. When they arrive, the wind has knocked over the trash can, and so there's trash all over the driveway. And so the guest was just like, hey, I just wanted to give you a heads up. It looks like this is what happened. Super great. We'll be out there first thing in the morning. We'll get all that picked up for you. Thank you so much for understanding. So housekeeper goes by, drops off, $10 Starbucks gift card with a little note that's like, hey, sorry, you arrived to trash in your driveway. Thanks for letting us get you taken care of. So that's what I mean, like with the hospitality piece, like I don't have a way to make, kind of tying it back to earlier, I don't have a way to make that $10 gift card like make sense on a spreadsheet. Sure. But that kind of stuff will help avoid a bad review on the back end, I think, as long as that channel for communication is open. So yeah, we really don't deal a lot with bad reviews.
That's great. I mean, that's a really good, way to handle it. And I mean, I would assume the worst, honestly, but that's great to hear that it's not the worst.
Yeah, no.
I guess circling back to something you said earlier, and just out of curiosity, because I think we touched on a little bit the licensing. So what does that process look like? And actually is like mind-boggling or, horrendous as they say, because I've heard some horror stories about like where someone's bought the property and they couldn't get the license for it. How does that work?
Yeah. Okay. So a year ago, my answer would have been really different. The city, it's really worth noting here that the city is actively working through how they want to, I mean, each municipality, the village, Oklahoma City, Edmond, Norman, they're all having these conversations around, okay, we have this beast. How do we want to handle it? Some people are like, it's here. Let's do it. Let's take the tax dollars. Other people are like, we have a housing crisis. F this. These people need to get rid of them ASAP. And so there's a lot of opinions about this. And the city is in the middle of that right now, which is important for investors to know because all these opinions are impacting decisions that are being made. So right now, as of about 2 or 3 weeks ago, there's actually a moratorium that a lot of people are not aware of. The city is not approving for either 180 days or when they come to a decision, whichever is sooner, they're not approving any special exceptions, which I'm realizing now I should probably back up. So if you live in your home, like this is your primary residence, and you are going to go travel to Paris for a year and you want to just list your home, this does not apply to you. If you're an investor, this is not your primary residence. This does apply to you. You have to go before the Board of Adjustment and say, I want a short-term rental here. Can I have permission? And they have to say yes, and that's called a special exception that allows you to have a home sharing license. When you have that, you take that information and apply for your licensure. The moratorium that is in place right now is saying, hey, that's step one of this process. Answer is no. If you already have your application in, we're going to go ahead and process those like normal. But overarchingly, the answer is no. There's a bunch of the caveats here. Like, so like one of the rules is that if them saying yes to you would make the number of short-term rentals in a platted block above 10%, that, and so, but like for the sake of a podcast, I don't want to get too granular with it, but it is important for owners to know that this has become, I mean, in 2021, summer of 2021, there were 1,700 short-term rentals on the market. And according to AirDNA, there are now 3,800. So we've had, so that's quite a bit of growth. And so the city is just kind of responding to that and saying like, hey, we have a lot going on here. We need to just kind of pump the brakes a little bit. So we're just going to default to no on some of this a little bit.
Makes sense. I mean, 100% makes sense. So how are you dealing with that? And then also, I guess like when you're going through this process of the acquisition, are you doing a whole bunch of acquisitions right now? Or are you saying like, hey guys, we need to wait to see what and how this works out?
No, this is one of the few business ventures in my life that I've done really slow and steady. The owner has to be a fit. The property has to be a fit.
Sure.
I'm really, really, really proud of our statistics, and I want to keep them that way.
Sure.
And I like my days. I don't have any grumpy people. And so I guess more importantly, I really want to work with people that it feels in alignment. So I'm not like in a huge, like, growth at all costs phase. We're in a like, okay, we want the growth, but let's make sure that we're a good fit. So that said, we're not like really pushing for like, oh, acquire this and acquire that. This is new. I mean, this is like less than a month old new. So very candidly, we're in the midst of figuring out anybody who's in our portfolio already has licensure. So they're all grandfathered in, they're good to go. Anybody I'm in conversations with, and this is only worth noting, so that ordinance is only for Oklahoma City. So it doesn't apply to Norman. It doesn't apply to Edmond. So a lot of the conversations I'm having right now with newer people are just around, okay, like, where is your property? Where do you want your property to be? Are you already grandfathered into this thing? And are you in a position where we could just do it as like can we list it for 30 days? Stays at a time until we get your licensure. If no, then that's probably a non-starter. Let's talk again in 6 months. But I'm rambling a bit, but it would be a complete lie if I was like, oh yeah, we've got this great process for this. Like this kind of fell in my lap. Like I showed up to a Board of Adjustment meeting for approval for one of our properties, and they were like passing out this packet that was like, effective yesterday. This is
Wow.
in place. Yeah. So we're
So
very,
you're like, oh my God, I gotta read through
yeah.
this.
Yeah. So I'm like frantically reading through, like, oh my God, am I about to get declined? And then I was like, okay, no, this one will be approved. We're good to go. I just have to worry about anybody who doesn't have a license yet. Yeah, it's a risk when you're buying. I would have a backup plan. I would not, if your house will not cash flow, like if you're right on the line on this thing, like don't buy it. Oh my God, don't buy it. I would just be careful and cautious with the acquisition process.
Yeah, I guess that leads me right to the next question was kind of like, on the investment side, you said be cautious. And that's kind of, I underwrite all of our properties with the most conservative numbers possible and really taking the worst case scenario on stuff. So that way, once we do get into it, hopefully it's, better than promised. You know, Tell me, I suggest, probably something way different than you would suggest to having reserves and stuff like that for the property, kind of what is your guideline on that? And what do you tell owners like, hey, be prepared for 90 days of, no income. You're going to pay this mortgage for 90 days or whatever it may be.
Yeah. Man, I don't even know anymore. I used to really kind of have some firm guidelines. At this point, I just tell owners, I'm like, I need you to be in a position where if I call you and your HVAC stopped working and you have to replace your sewer line, you are not bad. Like you are not hurting. Or if you're hurting, it's like an emotional hurt, not like I lose my house hurt. Like those are two different things. But the worst case can and will happen,
100%.
Yeah. So I don't have like a shiny number. I just mostly have a conversation with people around, is there like, if I call you and say, hey, your furnace stopped working and it's going to be $7,000 and your sewer line stopped working, or, it's done, it's shot, it's collapsed, and we've got to replace that and it's 12,000. That happens like every day in what I do for a living. Can you manage that? Yes.
Yeah, no, that's a great, thought and tell them like, hey, we need to have this in reserves and don't be surprised if it does happen because it's not about if, it's about when, right? So
Well, and also, and I am very like, love the American dream, go get it. Like I bought my first house when I was waiting tables at Cheapers, and it was like a little house with a garage apartment, and we rented it out. And at that point, I was like, I'm making $700 a month, and my mortgage is $900. Like I'm basically rich, and this is
yes.
And I did not have enough money. I mean, I was full-time student and waiting tables. Like it does not take much math to figure out how much money I was not making.
Sure.
And so if somebody would have told me like I need to be able to replace the HVAC and the sewer line, like I never would have gotten started. So I kind of subscribe to both ideas because there are financing plans for HVAC systems with most credible companies at this point. There are solutions. It's mostly just a conversation around like, if this is actually the last bit of money in your savings account, like maybe not, like really, maybe not. But if you're, in a position where you can explore solutions and get creative and kind of make it happen, and this is a dream, go for it. But that's where I honestly put all of that on the owner. I'm like, you've got to decide your comfort level.
Are you risk averse or not? Right. Like,
we all got to kind of figure that out. Because there's a lot of people way wealthier than I am because they can tolerate more risk than I can tolerate.
Yeah, absolutely. Well, I mean, that's a really good point. And I mean, I guess, whenever you're getting that investment, especially short-term rental, there's probably a time in the market that makes the most sense to buy a short-term rental. Would it be, I guess in the springtime, so that way you're hitting it at the summer, or is that how that works? Or
generally speaking, I'm going to say worry about getting a really great deal. We are not in Hawaii. We're not in Montana, Colorado. I mean, if you're in Vail, Colorado, you've got a window where you have to make your money and then you're dry. We're in Oklahoma, like we've got our highs and lows, but like it's all relative. So if you're really going to be a purist about it, January, February, and August are the 3 lowest months of the year. So that's whenever I try to do, like if I know I need to replace carpet or when I replace some light fixtures or do improvements, I try to do it in those 3 months because the nightly rate and or occupancy is going to be lowest at that time. And if you have an awesome deal and you're going to be setting that up in November, take the awesome deal over like an average deal in February. Like it's Oklahoma. We're fine. You're fine.
Absolutely.
You're fine. Yeah.
So that's a really good point. Well, I guess kind of just to wrap everything up and ask you one last question, it'd be, if someone is just getting started, super green, maybe they are an investor, they've done, maybe let's say storage units, or they've had a long-term rental, but they're like, hey, I want to diversify into short-term rentals. What would be your main piece of advice for them getting started?
I would say, like, pragmatically, like actual practical useful advice is to really style it very well, design it very well, invest in exceptional photo assets for the property. If you are dead set on doing it yourself, you do not set it up and forget about it. Every single guest has to be touched. We check on the property. So guest checks out, housekeeper cleans the house, and then somebody from our team checks on the house after the housekeeper and before the guest checks in every single time. So set yourself up well on the front end, maintain yourself well if you are really committed to doing this work yourself. And I do believe that we are probably one of the best in the market at doing this. Call us, call somebody to get help if all of that seems overwhelming. But if you're not going to maintain it, that you're not going to check on it before every guest, I would say the market is competitive enough that you should call somebody or email or do whatever you need to do, but outsource that.
Yeah, absolutely. I'm probably a little bit biased because we do property management, but we've only heard good things about Table Investments, and have really want to make sure that people know that if you are doing a short-term rental, property management is probably the best thing for you, because I'm sure it's a lot more high touch point than long-term rentals and everything.
Well, and you make more money. Actually, truly, our owners make more money with us than they wouldn't. Our occupancy right now across the whole portfolio is like 88%, and the market
that's very impressive.
I know, and the market is at like 52%. So I'm like, when I tell you that we are earning our management fee, and it's pricey, it's 20% of gross revenue. So people look at that and are like, okay, so if you're bringing in $6,000 a month, holy crap, you're making $1,200. It's like, and we are earning every freaking penny of that. And earning it for our investors. Like, legitimately, they're making more money than they would without us.
88% is insanely impressive. So that's something that you should be very, very proud of. That's awesome. Absolutely. Well, I'm going to put your email and your website in the show notes. That way people can, reach out to you. I know we have a lot of people that have been asking about short-term rentals and kind of, where to get started at. So I really appreciate you coming on, and thanks for joining me today.
Yeah, of course. I had so much fun. Thank you.
Absolutely. Thank you.
Thanks for listening to the Same Day Podcast. Tune in to a new show each week and be sure to subscribe to get future episodes.